Hi traders, welcome to the Markets in 3 with me, John, Senior Market Analyst here at Anzo Capital. I'm here to give you the latest information on all things markets, as well as some key charts to watch. Maybe a couple of trades thrown in there, here and there. But today we're going to be focusing a lot on the US CPI that is coming up tomorrow. Big event for the markets, big event for your currencies like the US dollar, currency pairs like the euro dollar, for instance, and your stock markets, as well as your gold prices. So we're going to be checking out that today. We're also going to be taking a look at some interesting Forex strength and weakness developments, and we're also going to be talking you through the skill of the day too. So let's first talk about the currency strength meter, and then we will go from there. So let me just bring this across. I'm just going to turn it on to light mode so you can see that a little bit better. What are we seeing in terms of currency markets right now? Well, we are seeing the fact that the pound is actually the strongest currency at the moment, and that the Australian dollar is the weakest. So immediately when I see this and I come to my charts on a Monday morning, I can say to myself, well, that could be, not that we should go and buy this market in particular, but it could be a market that we want to take a look at going into this trading week. The other market it's saying that we could have a potential signal on is the pound against the Swiss franc, as well as the Swiss franc has also given back some gains. We can also potentially look at the US dollar as well. We've actually seen the US dollar fall from being one of the strongest currencies, being at that kind of +7, +5 over the past few weeks, and is now at -1. So we've seen a big change in the US dollar strength in the markets. So that to me could be a sign that potentially the US dollar is reversing. And the New Zealand dollar has come out as one of the strongest currencies of last week, changing +6 on the weekly change chart. So again, could we potentially look at buying the New Zealand dollar now against the likes of the Australian dollar, maybe even the Swiss franc, perhaps even the US dollar? So there's still a lot of potential going around. The top chart to watch is pound against the Australian dollar. So let's go check out that chart first. So the way we can do this in our MetaTrader platform, I always like to use a default profile when I do this because I want to try and make a new chart, and I'm going to make a pound Aussie profile just as I go. So the first thing we're going to do is go to File, New Chart, and then we're going to go down to our Forex miners category, and we're going to look for that pound Aussie and select it. Now I've already got some templates saved, so I'm just going to right click on the chart anyway, go to template, go to that template and open it. So you can see I've got a pound Aussie hourly chart here, and I'm going to do that again a couple more times just so that I can create multiple time frame view of that. So same method, file, new chart, come down to Forex miner, go to pound Aussie, right click on that chart template and hit the template in here. A little bit later in the show, I'm going to show you how you can create your own templates in the MetaTrader platform. Okay, now you can see here I've got pound Aussie on the chart then. So I've actually got a hourly chart. I'm just going to separate the 2 pounds here. I've got an hourly chart on the right hand side, on the left hand side I've got a daily chart. Okay, and the reason why I do that is because I want to see the overall kind of bigger picture of what's going on in the markets, right? So we know from a currency strength and weakness point of view, we potentially want to be looking at pound Aussie maybe for long ideas, right? But we have to then look at the conditions of that market. If we're buying pound, what do we need to see? Well, we need to see pound Aussie in an upward trend. We need to see it making higher highs and higher lows. Is it at a level of support, perhaps? Or is it at a moving average support? Or is it at resistance? These are the things we've got to work out now, because if it's at resistance, do I want to buy it? Potentially not. I want to wait for a potential breakout continuation. Or if it is at resistance, can I wait for price to come back to support before looking for the buying opportunity? is price at support? Do we have a buy now? You know, there's lots of different things that we need to consider. So I'm just going to maximize this daily chart, and we're just going to do some technical breakdown here first, perhaps even go up to the weekly chart and have a little look at what's going on. So immediately I can see from this weekly chart that the price has been trending down really since the 6th of April 2025. Price has been pretty bearish. We've moved from the sort of highs that were around that 2.1644 handle all the way down to 1.86100. So that's, you know, over 3,000 pips there to the downside. So over a decent period of time, we've seen the pound being weaker than the Australian dollar. A large reason for that was because the Australian central bank has been hiking interest rates, while the UK central bank has kept interest rates pretty flat. So there was a lot of also weaker growth stories in the UK, and we saw that drive down. However, that's starting to change now. We're starting to see the fact that actually in Australia, they think that they have controlled inflation pressures, and that we've actually seen a central bank that is leaning more to just remaining neutral, whereas in the UK, they are leaning a little bit more hawkish in tone. So that could matter to what happens potentially for pound Aussie prices going in the future from a macro point of view. Looking at it on this technical chart at the moment, we can see that price is coming up into an area of resistance. So if we take a look at this area in particular here, around about that 1.9350 handle, we can see that price has come into this zone and has recently started to stall there. Okay, so that could be significant going forward because it could obviously be an opportunity or an idea that the market, we need to see price break out of this zone first before looking for a continuation to the upside, as this area could act as resistance. I can see as well that price has also rejected a little bit lower as well. Let me just adjust this line here. So in MetaTrader, if you hold control, click onto your trend line, it actually creates a copy of that as well. So I can see that there's some support down here as well. Where is that? It's around about that 118 handle. 181 handle. 181 flat. Down in here. Or sorry, 188, I should say. Let me just 188 flat. Right there. Okay. You can actually see maybe price even formed almost like a inverse head and shoulders pattern, right? We had the market that formed a sort of a low in the middle of May, is that? Let's have a quick look. Sorry, March, throughout the sort of early stages of middle of March, and then formed a higher high, which, a lower high around about 193.50, and then created a new low on the 10th of May before seeing price come up into that sort of neckline area. So there might be sort of a little bit of a inverse head and shoulders play going on here at the moment with a sort of descending neckline. So the market could be looking to potentially break out of this area here. From a sort of weekly time frame, we are trading below the 200 moving average here and the 50 moving average. So that is definitely showing signs that, you know, there is more sort of sellers within this market than there are buyers. But looking at that from, that's a weekly perspective, right? So the market can do a lot within those weeks. Now going down to the daily time frame gives us a little bit more perspective here. We can see that obviously price was finding support in and around that 188 handle and is finding resistance up at that 193.50. So looking at this right now, it's kind of asking myself, do I want to be a buyer of this market? Maybe not at these prices. I need to see price maybe come down a little bit first before looking for continuations to the upside. Where could we look for these, right? Where could we look to potentially buy this market? I always like to look at support and resistance, and I always like to look at something called market profile. So first of all, let's take a look at just generic support and resistance levels. So if I just grab my crosshair tool and just kind of highlight over the chart. I'm going to look for areas where the market and price has touched multiple times. So I can see around about this 191.25 handle just through here. The market has obviously come into this area before and has reacted. So 191.25 could be an area of support. Okay, so I'm just going to add a little bit of a price label on here. Just so I can highlight that to you guys as well. So in and around that area there, you can obviously see price has, I'm just going to expand it left as well, because what you can see is the market actually rejected here before in the past, rallied, found it as support, broke through resistance, and then most recently found resistance here a little bit again before price broke through. So that 191.25, so 1.9125 handle has been support in the past. So there's a good chance that that could be support again going into the future as well. Hi everybody, welcome to the stream. So Sufyan, welcome. We are going to have a little look at potential entry points as well, for sure. I'm just going to bring up a market profile first, and then we can have a little look. This is pound against the Australian dollar at the moment. We're looking at this because there is a potential opportunity to be a buyer due to the currency strength and weakness for this trading week. So we're looking at pound against the Australian dollar here as an opportunity. But again, we're trying to map out an area where it could be good to buy this market instead of just trying to buy it in now. So I like this kind of 191.25 handle. What I'm going to do is I'm just going to add the adjustable market profile on the chart, which is a custom indicator that I have. And what I'm going to do is just highlight that recent swing low up to the recent swing high, right? And what this is going to allow me to do is just to identify those key areas where the market has done business in the past. So if I just go to a 4-hour time frame, we'll be able to see these areas in a little bit more detail. I might just bring it in slightly into this area here, like so. And what we can see is from that kind of leg down from the 19th of June all the way to the high that formed on the 2nd of July, we can see that the most traded area through that level is here, right? Just below that 1.9125 handle. So it's probably around about that 1.9080. So that means that in this kind of move through here, buyers and sellers were most comfortable around this level. They see that as what's called fair value, right? So you might have heard fair value gaps and all this kind of stuff. But fair value is where buyers and sellers agree and we get a little bit of an accumulation in price. That can often mean that there is large orders resting around this area. And what it could also mean is that buyers won because from after that, price did rally. So I'm looking to potentially buy pound Aussie down back at this 1.9125 handle, even towards that 1.9080 area where we do have that market profile showing us that there is a decent area of support. At the moment, price seems to be looking at breaking out of the value area high, 1.9257 seems to be that area. Price has found support there as well. But that would be my most ideal place. So I'm going to start setting alerts around this area here. You could look to set buy limit orders around that price. So if you were looking to be sort of on a buy limit, you could set it around about that 1.9125 handle. But then you have to think about where your sort of risk is going to be. Is it going to be below that point of control that we just had a little look at? So maybe even below sort of 1.9025, maybe 1.5, just to kind of give yourself a little bit of a breathing room to see if price rebounds from there. I technically prefer to look for price action at that level. So I'm going to leave in a alert to see if we can potentially get back to that. Can I take a short position? Potentially, right? But just know that you are going against the trend, right? So I don't like to particularly do that, but you can trade that. If you understand that the market could potentially be moving in a what I call a phase 2, so P2, P1, P2. If you can identify that part of the trend and try and take that position in there, yeah, absolutely, you could look for a short position because you're at this weekly resistance through here, which is a strong level of resistance. If you look at the 4-hour chart, we are starting to break down a little bit. I think for me, if you want to get short right now, again, you want to be kind of looking at kind of strong areas of support and resistance. So what I'm going to do is, let's leave that there. Let's go to a 30-minute time frame on another chart. I'm just going to click Control Y on my keyboard, and it brings up the period separators. So looking at this today, you can see obviously pound is starting to reject in and around this level here. But why is it starting to reject in and around there? Let's have a little look. So if I just bring on the market profile for Friday first. This is why I love using market profile, right? Look at this. Price rallied in the morning. Where did it rally to? It rallied into Friday's point of control, right? The most traded area on Friday. Up at that one spot, 9320. Look what happened to price. Rejected, rebounded to the downside, right? So looking at this right now, I can see that price has rejected that point of control. We've broken out of Friday's value. So that area there could act as resistance going forward, right? If we're looking at sort of potentially what could happen now, let's map out what's currently going on today as well, right? So we're currently at today's value area low too. So if we can break beyond that, right, let's say price breaks, holds below it, then we could look for price to come back to the current day value area low or yesterday's value area low, sort of 1.9280 and above for potential short ideas. That's where I'd be looking to potentially get involved with pound Aussie on the short side if you were looking for price to kind of continue to kind of reject from that weekly resistance zone back down towards in and around, that one spot handle, which was on our daily chart, which was that 1.9125. Okay. So the answer is yes. Obviously, you can trade currencies both ways, right? So if you're comfortable with trading against the trend, then there is a possibility for you to try and push price down towards that 1.9125 handle. But just be aware that you're going against the main trend, and that can obviously lead to you being on the wrong side of the market. Plus, manage your risk appropriately. Okay, so potentially look for that break, retest, continuation move in and around here. So let's move on. Let's move on to another chart of interest. So another chart of interest for me is still gold. So we ended up shorting gold last week, which worked out pretty well. Since then, the market has kind of consolidated a little bit. So we rallied up higher, market consolidated. We ended up taking a couple of short positions in and around this area here, down to the support in area around about that 4,075 handle. And look at this. So what I've drawn here on gold is the market profile of last week, right? So this is Monday here of last week. This is Friday, right? So I've drawn my market profile from swing high to swing low of that trading week. So you can see where we're trading on Monday, and you can see we are trading below last week's value area. So when I say value area, this is where 70% of last week's trading occurred. Okay. And in market profile trading, you can look for price to kind of come into these different types of levels, like the value area low, point of control, or even the value area high, and act as either support or resistance. Okay. And you can also look for sort of high volume nodes, low volume nodes. Okay. So those are areas as well that can also act as support and resistance. Now, what's interesting is obviously 70% of all trading is done in this little area here. So between the levels of $4,094 up to 4,167, that's where most of last week's trading was taken, right? But notice this little zone in here, right? There's another high volume zone, around about $4,075. You can see how price recently broke down through it and has retested it, rejected it, and the market has started pushing down again. So I quite like the idea of a continuation lower in gold. Obviously, we've seen a recent reaction where the escalations between the US and Iran have kicked off again. Now, most retail traders would see that as buy gold, right? But it's what it's what impact on inflation it's going to happen, right? And this kind of leads me into the big story of the day, because we are looking at potentially the US CPI being a big impact on the markets this week, right? So if obviously oil prices rally high again, that can have an impact on headline CPI. And if that does have a large impact on headline CPI, then obviously traders are going to price in the more idea that we are going to see rate hikes from the Fed. And that could drive gold prices lower, right? However, it is forecast to come in much lower. So if I just grab the Forex Factory chart and have a little look at that. So this is the big news for this week. Core CPI, month on month, core CPI year on year, CPI month on month, CPI year on year, right? Now, if you have a little look at the forecast, they're all forecast to come in lower. So CPI year on year, 4.2% down to 3.8%, okay? If we take a look at core CPI year on year, down from 2.9% to 2.8%. Right. So the predictions and the forecast is that we're actually going to see lower inflation. So if that does happen and we see lower inflation, what does that usually mean? It usually means that the US dollar could be weaker. But why? Right. It's because the bond market. So if you look at something called yields, right, and I'll show you in a second, but if you look at something called yields, they decrease. Okay. Because it means that we aren't going to see a rate hike. So people that are wanting to, take on government debt to get interest back for their capital, they're going to look for better returns elsewhere. So they'll move their money out of US yields and they'll push it into something else, like gold, for instance. So that would be an interesting concept to have a little look at in terms of what happens if we do get a lower core CPI. Now, core CPI is important because it takes out the most volatile parts of the consumer price index, so like energy, food, things like that. Whereas the headline number obviously includes what's been happening with oil prices. Now, oil prices have come down a lot, right? I know that they've jumped again recently because of the tensions between the US and Iran and the fact that we've seen the Strait of Hormuz close again. So oil prices back on the rise. But since the last CPI reading, oil prices have come down a lot. So I do expect CPI to come in around about forecasts or even lower than forecasts, right? Potentially. But we need to keep an eye on the core CPI, because core CPI is, what is actually happening in terms of consumers, right? So you can see here, changing the price of goods and services purchased by consumers, excluding food and energy. So that's going to give you a little bit more of a real reading of the demand in the market, right? The best one, obviously, is core PCE, which is why the central bank uses that more often than not, or they say that it's their preferred measure. But, core CPI gives us a little bit more of a reading into that. So if we do see that, then gold could start to bounce and we could actually see a little bit of more upside. So that's why these market profile levels can be good, because this area here, this zone of last week, could be a point of interest for us. Because let's say price has a good reading tomorrow, gold rallies back into that value area of last week. We can use the value area low as potential support and then trade back towards the value area high. Right, that's one option. If, however, the report is not as bad and it actually comes in around previous levels, then obviously that could be really positive for the US dollar. So we could actually see price reject that weekly value area low and move lower. So there's definitely a couple of options when it comes to gold going into this trading week because of all the movement that we've seen so far. Now, if I go take a look at kind of, current day, so this is where we got short last week and we shorted down into these levels through here. Obviously gapped a little bit lower today and prices continued on. So let me just grab again, just make sure. I just want to make sure I've got a fresh market profile on here. Okay, so that's Friday. And this is current levels today, right? So again, price isn't really doing much. We dropped initially aggressively, but then price has been pretty capped between these levels, the highs and lows of the day sessions. So we could be seeing a market today that's a little bit more range bound on gold, which again gives us opportunities. So we could be buying from the value area low or the lows of the day, looking to target the other side of value where we could potentially sell, right? So this could be a day where we get a bit more of what's known as a balance day, which creates a little bit more of a capital D on the market profile versus something where we have double distribution days, which is currently what we've got kind of building at the moment, which looks like a capital B, right? So we'll see how this one kind of plays out as it continues for the day. But because the CPI tomorrow might be coming in a lot lower, traders might try and anticipate a little bit more of a breakout in gold. So I'm going to see how this one plays out, especially for the US session. If we do start to find support down towards this kind of $4,050 area, or even at the value area low, around about $4,055, if that starts to find support there, I may look to go long on gold today, back up into the resistance highs. Now, one thing we've got to just keep an eye on, like we have to keep an eye on, is yields. We can't ignore yields, because if you trade gold and you ignore yields, you're going to get cooked. Okay, you need to make sure that you keep an eye on this. So let's have a little look here. So 2-year yields are back up today. Okay, so at the moment, they're currently trading around about 4.2%. Last week, they had a good week. They closed bullish, and they still look fairly strong here. So again, that's going to play on the downside of gold, because if yields continue to push higher, then the likelihood is that bond traders are going to be pricing in the fact that we are going to see rate hikes in the future, or at least holds at higher levels, right? Let's have a look at the CME Fed Watch tool. Okay, so we haven't really changed too much from here. A week ago, they were pricing in only a 25.7% chance. On Friday, there was a 34% chance of a rate hike coming in the July meeting, which I don't think is going to happen. But now it's pricing in a 33.7% chance. So we haven't moved too much. If we take a look at the September, though, there is a 69.3% chance of a rate hike, right? So that has come up a little bit from previous. So you can see, actually, look, you've got 51.2% expected to jump 25 basis points higher. And you've got 18.1% of traders thinking that they're going to go 50 basis points. So what we need to see is these expectations come down, right? And a hold go up. And if that happens, then gold prices are going to be back bullish. If it doesn't, and we see expectations like in the September meeting of a 25 basis points hike rise, if we see a 50 basis points rate hike rise, then that's going to be bullish US dollar, and gold prices are going to continue to push a little bit lower for the near future. Now, my only concern is that gold has been down for a while now, right? But retail could still start trying to buy around these levels, because they just see it as it being so far down. How can it go any further? Well, trust me, it can. It can go as far as it likes. There is that saying in markets: markets can remain irrational longer than traders can remain solvent. So you have to keep that in mind whenever you're looking at a potential opportunity. Always kind of put in the best possible outcome for yourself, or best plan in place. So take a look at this daily chart here. Look, market is still, it's not breaking high or anything like that. So until that happens, I still like to be on the short side of gold, potentially back down into this $4,000 level. All right. So we'll keep an eye on this one. Maybe a good trade today could be back up that value area high around about that $4,080 level. If we get back into there, could be a good opportunity to maybe get short with a move to the downside. Or if price does break out of that, we have Friday's value area and point of control trading a little bit higher, around about that 4,098 handle for an opportunity. We could also take a quick look at euro dollar. Euro dollar actually jumped this morning as well, and we saw quite a strong move to the upside. I've been monitoring this one because we came up into Friday's value area high around about 114.45. We rejected it. Prices in yesterday's value, Friday's value. So I was expecting to move back down towards the value area low at 114.20s. So I'll see if that happens. Might get a slight bounce, but a break below that could offer a short-term short back down into current day's values around about 114. So that could be something to have a little look at going into today's session as well. But you can see earlier in today's session, so throughout the open of London, the market rallied 45 pips to the upside. So I'd see that US dollar weakness come into play throughout sort of the day. So we'll keep an eye on that for sure going forward. Any questions on that, guys? Anyone is having a look? Any chart of interest that you want me to take a look at, feel free to drop it in the chat as I'm going along. I haven't actually looked at any commitment of trader reports data, so maybe I'll have a little look at that first to see if there's any kind of big changes there. Not a lot. Interesting, we've got a commitment of trader report signal on New Zealand dollar, but maybe I'll leave that for a different day. But on the US dollar front, not much going on. Let's have a quick look at, the S&P 500. Really want to be a buyer of the S&P 500 recently, but I've bought it twice, lost 2 trades on it. So I'm looking to see, is there a chance for me to buy again, right? Let me just move some of these profiles over. Let's look at Friday's profile. So, we're not trading in US hours just yet. We are coming up to that in about an hour's time. But yeah, it looks like we're trading out of Friday's value already. Looks like the market is finding a little bit of support. Again, if US CPI comes in a lot lower, stock markets could benefit from that. And we can see a continuation to the upside here. Gapped lower on the open. Market has pushed a little bit lower. We've traded into value area low of Friday, rejected, found support. Now we're at value area high. We've broken through it. We're holding it at the moment. If we stay above it, then there's a good chance that we do see price push to the upside. What I will be keeping a very, very close eye on today is how price does react to sort of the current open or the current sort of value area being built, right? So I'll be keeping an eye on that because if I do want to be a buyer, I want to be looking for this upside. The reason why I want to be a buyer of the S&P 500 as well is we do really have some strong seasonal players at the moment on this market. And if I show you the seasonal chart of the S&P 500, you'll see why I'm looking to be a potential buyer. So this is a chart of current price. So current year is the green line, 20-year line, 20 years average is the orange line. Okay. You can see here on the software that I'm using, we've got from sort of July, 30th of June to the 20th of July, we have a strong bullish run in the stock market. Okay, so I want to be trying to potentially get on the back of that. In history, over the last 20 years, we've got 19 wins, 1 loss. So that's 20 trades. Average gain, 3.1%. Okay, so when I look at that, I think, well, where are we now in terms of that sort of percentage from the 30th of June? So if I just go to the daily chart, but it's been a bit of a choppy month so far. So the 30th of June is here, right? We are only up around about 659 pips at the moment. So if I go to trade and view, let's have a little look. Let me grab our range tool. So from the close on the 30th of June, right, to current prices right now, we're only up 0.8%, right? So if I go to the open, let's have a little look. I just want to map out where that 3.1% gain could be. So even if I go from the open on the 30th of June, it's only 1.5%. 3.1% could take us up to around about 670. So that could be our sort of target on an average return for the S&P 500. But again, we need some catalysts. So if the US CPI tomorrow comes in lower, that's typically good for stock markets. And we could see a little bit more upside, right? Means that borrowing costs could potentially lower X, Y, and Z, right? So keep an eye on that one as well going forward. I think there's a potential good opportunity there to be a buyer of that market. So let's finish on the skill of the day. Okay. Now, earlier I was talking to you about potentially looking at your MetaTrader platform for some opportunities, and for the skill of the day, I was going to show you how you can set up a template on your chart. So if you don't understand the MetaTrader platform, don't worry. MetaTrader 4, MetaTrader 5 work in very, very similar ways. I'm using a MetaTrader 4 chart at the moment, but if I was to show you this on MetaTrader 5, it'd be pretty much exactly the same, right? So let's go take a look at that. So if you want to set up a new template, first of all, I'm just going to open a new chart. It can be absolutely any chart, but usually when you open your MetaTrader platform, it'll look something like this, right? You may have a template already featured. So if I just go to one of the ones that they've plugged in here already, it may look something like this, right? So first of all, you want to get back to a blank slate. So the easiest way to do that is right click on your chart, get rid of the grid first, right click again and come down to properties, or select F8 on your keyboard, right? That'll bring up this properties box here. And this is where we can edit and alter all the colors, right? So I like to keep the background as black, foreground as white. Okay, now the grid, obviously you can change that to none if you really want to. And then the bar up, I have it as white, right? Bar down, I have it as crimson, right? Bull candle is white. So the bar up and bar down is kind of like the outside of the candlestick or the outline, whereas the bull candle and bear candle will be like the fill of that candlestick, right? So the bear candle is crimson like that. And then I pretty much leave everything else off, as normal, right? You can have period separators on. That's just these dotted lines through here, but we can toggle them on and off whenever we want. So just click OK, and that will do that. Now, to get rid of the indicators, there's 2 ways you can do it. Come down to your indicators, right click and just delete. Or if you right click anywhere on the chart, come to the indicators list, there will be all the indicators written on there, right? So you can come through and delete all of those indicators off. Okay. So the indicators that I use, first of all, I go to insert indicators moving average. One of them is a 200 period moving average. Okay. And I have the visualization on all of those, right? Click OK. And that's that orange line on there. The second one is a 50 moving average. So if you go insert indicators moving average again, you just need to alter the period to 50 I keep the MA method as exponential. It's not too much difference between that and a simple, to be honest. And then I change the style to dark gray, click OK. So I've got the 50 and the 200 moving average on the chart. The last thing that I like to put on is what's called a adjustable market profile. This is my own tool that I use. And then I click OK. And that's just waiting for me in the background. All I need to do is press P on my chart there, and I can develop my market profile, right? So once I've kind of got that foundation there in place of just kind of the tools that I want to use, obviously you can add other things as well. Sometimes I use a stochastic oscillator. So if you come to oscillators, down to stochastic oscillator, you can have that on your chart too. And then to save the template, you just want to right click, come to template, save template, and it'll pop up with a little window. Now, just as a reference for this, and if you want like a quick way of doing it, or a quick way to get to your template on the MetaTrader platform, put a 0 in front of the or the start of the file name, right? If you put a 0 there, it allows you to get there quicker. So it's just a quick little tip. So if I put test 2, okay, and click save, that'll be my template. So the next time I come to opening a new chart, let's say like CAD Swiss here, for instance, I can just come in, open the new chart, right click, template, test 2, right? And even if I press P to make sure that the market profile's on there, there you go, right? You had it on there, like so. Okay, so that is, if you want to create a template in MetaTrader 4 and MetaTrader 5, that is the easiest way to do it. Okay, just get rid of my other market profile in there. If you want to adjust it anytime, that's absolutely okay. You can do that, but also make sure you come down and save the template again and save as over it. Okay, so my template is the Anzo template. That's the one I've just shown you there. You can obviously change it to as whatever colors as you want. All right. Let's go back to gold. I just want to see where gold is. I didn't set any alerts on gold, so I just want to set an alert back up at this 4,000 sort of an $80 area. So I'm just going to set a little alert there. If price gets back to that, we could reject, and price could remain in this kind of like overall sort of range that's being developed on the day. So I want to keep an eye on that one. I'm also going to set an alert a little bit higher, around about $4,097 as well, just to see if we get up into that area there. If we break out though and we move lower, like I said, I think the main sort of concern would be a move down towards $4,000 again, sort of in this area here. That could be a good target. Maybe even 4,025. So we'll keep an eye on those. I'm just going to put an alert here as well. So we'll see. I've now got a map for kind of every eventuality on gold today. So if price does come into an area of interest, you know, I'll figure out what happens at those points. Same with euro dollar. Okay then, guys. Right, I'm going to leave it there. We've done about 45 minutes. I've took you through some of the important features of today, including the sort of the chart check where we were looking at pound against the Australian dollar for opportunities. I've also talked about the big story coming up, which is the US CPI, how that's going to impact markets, and the big story, and the skill of the day, we were talking about how to create a template in MetaTrader. So thanks for watching. Appreciate it. If you did like it, leave it a thumbs up, subscribe to the YouTube channel, and I will be on every weekday for the remainder of the week at 9 a.m. So catch you then.